Welcome back, beautiful and amazing human beings. And holy cow, do we have a lot of bad financial news coming in right now. If you remember, a few weeks ago when we started covering the coronavirus news, we told you, look out for the economy, the economy, the economy. It's all about the economy, stupid. And to discuss this plus a lot more, we have Tim Pichette joining us today. He is a certified financial planner and does a lot of financial analysis news. And Tim, holy cow. I mean, we even have hashtag market crash trending right now. We're going to get into this plus a lot more. Me and Tim, by the way, have just started a new YouTube channel, which we're going to be continuing the conversation on from this video to the second channel, a totally brand new spanking channel that hopefully doesn't get scroogled by the Ministry of Truth. But that's a whole nother topic to get into. But Tim, this is the third worst opening behind the 2008 financial crisis and 9/11. This doesn't look like it's going to get any better from here, especially with all the news surrounding oil, Vladimir Putin, Saudi Arabia. But first of all, for the layman person who doesn't know all the terminology and lingo, what's happening here, Tim?
Hey, Luke, well, I appreciate you having me on. And what's happening right now is really a continuation from what was going on in September. So what we saw in September is the repo markets absolutely froze up. And for your viewers are probably wondering, okay, why do I care about repo markets? What the heck even are repo markets? And so probably a better place to start is a lot of people know that the Federal Reserve controls certain interest rates. Well, the rate that they control is called the Fed funds rate. But the only thing that matters is if you are a bank and you go to the Federal Reserve as what they call a lender of last resort, and then you borrow money from the Fed. That's all the Fed funds rate actually entails. And so every night the banks have to keep 10% of their money overnight in basically in reserves. Now what happens is some banks have too much, some banks have too little, and the banks that have, let's say, 11% will then lend money to the banks that only have 9%. So then that way they'll all even out at 10% for the day. Now what happened in September is that those overnight markets shot up to 10%. So banks were charging each other 10% to borrow money overnight. It was a complete panic situation, except what happened is the bigger point in this is that the Fed the banks rather could have went to the Federal Reserve to borrow money, but they didn't want to have it go there because there's a certain stigma. So if you end up borrowing money from the Federal Reserve, there's a stigma attached to that. And so what they effectively allowed was everybody to go borrow money from the Fed. And so that way nobody knew what was going on. So this is all basically a continuation of that. And so that all got papered over. The average person has no idea any of this stuff is going on. And what we're seeing now is the Fed just increased those operations to $150 billion a day. Every single night, they're injecting $150 billion a day. Right now, we're taking a look at the markets. The Dow Jones is down almost 2,000 points, 1,961 points. I don't know if I've ever seen a down 2,000 handle ever before. So that's down 7.5%. The S&P is down about 7.3%. NASDAQ down 6%. Global markets are all down in Europe, are all down right around 10%. So this has been an absolute bloodbath. The other things that are going on, this is not just limited to just stocks. You have crude oil, as we're showing on screen right now, down 21.66% for the day. Brent oil down 21% for the day. Cryptos, same thing. Those are down, about 10% with Bitcoin. The altcoins, hanging in right around there, 10% as well. And then you've got the treasury yields. This is actually the first time ever that we've seen all the treasury yields below 1%. Now, right now, that happened earlier in the morning. Right now, the 30 year is at 1.01, so it's sort of ruining that a little bit. But these are historic numbers. The 20 year at 1.07, and then you've got the 10 year at 0.5% right now, 0.51%. And so this is epic moves that in the financial geek world, I mean, this stuff almost never happens. And then here we've got an article from Business Insider where it shows the entire U.S. yield curve plunged below 1% for the first time ever. And so this is a gigantic red flag. It almost always means recession when you've got the yield curve inverting like this. And so I just really appreciate the opportunity to be on, Luke. And
yeah. Yeah, it definitely seems like a total bloodbath out there with everyone losing, including in the alternative spheres of crypto. And it definitely doesn't look like it's going to get any better from here, especially with all the news surrounding the coronavirus. Now, being here in New York City, I mean, I mean, there's barely people, doing what they usually did. There's a lot of people taking a lot of precautions, which they should, but the travel industry, the airline industry, they're all just being hit. I got an email from a major airline being like, just book any ticket, please. We'll refund you if you don't want to take it. We'll let you fly and change the date. No problem. Anytime. Just please give us some of your money so you fly. There's a meme going around saying that this is going to be extremely bad for the boomers while the millennials are buying up all the crazy deals for Hawaii and all this other thing. But in reality, not a lot of people are buying stuff. A lot of people are staying in. A lot of people are not going to restaurants. And it seems like the only industries that are doing really well, and why we kind of saw an uptick in the economy, are pretty much Costco, big pharma companies, and then those little 99-cent stores that bought all the stuff from Costco and are now reselling it at a huge markup. I can't tell you. I just walked around the neighborhood a little bit here. All the 99-cent stores have everything that you're looking for, but a huge markup here that, of course, people are taking advantage of this situation. But we're not hearing a lot of the stuff with the financial stuff that you were talking about in the beginning. We're hearing a lot of the coronavirus stuff. What do you make of that before we jump into the whole Saudi Arabia Russian situation? How do you see this playing out? Because I see this getting worse from here myself.
Yeah, I mean, this was just right now. I mean, this was just a bubble looking for a pin with the stock market. I mean, I gave a presentation at Anarchapulco at the TDV Summit on February 11th, and I didn't mention the word coronavirus once in there, and gave a whole half an hour where I was talking like a machine gun that would have taken somebody else 2 hours to go through, of giving all the different problems with the economy. Now, the problem is when you have an economy that's built on a house of cards, that's built on more and more debt, that's just predicated basically enslaving more people to debt, then when you have a situation where all of a sudden, the apple cart stops, and all of a sudden, the music stops playing in this, game of, little merry-go-round debt carousel we have, the whole thing starts to collapse. And so in China, what we're seeing now is you've got factories that have been shut down now for weeks, and there's just a huge amount of economic output that's been stopped over there. I mean,
yeah, and just to cut you off, I'm sorry to cut you off really quickly, but one of the frightening things that I saw was the satellite imagery from China, specifically showing all the pollution going away. And this is, again, people need to understand, when you look at anything and everything, it says made in China on there. With production stopped, with even Australian news reports coming in of Uyghur Muslims and the concentration camps that they have in China, they're thought criminals being put to the factories there because everyone else is too afraid to work there. This really signals something bigger than just a correction to the market. Am I right or am I wrong?
You are. And actually, I just pulled up on screen right now. I've got it says one of the silver linings here is carbon emissions down 25% in China as flights and industries bear coronavirus brunt. Yeah, another thing that's made over there is basically all the pharmaceutical drugs that we take. A lot of those N95 masks that people are wearing these days, those are all made in China. And so when you see, China all of a sudden, a lot of their businesses, in 2 or 3 months, they're going to run out of cash and not going to be able to afford, be able to pay their payroll. And then just imagine all the cascading effects that's going to have. And so when you have an entire economy that's all globally, that's all propped up on debt, and if one of those legs all of a sudden comes out of the economy, the whole thing starts to go down. And so what we saw when Trump came into office, it gave people a lot of hope, a lot of optimism. That optimism then caused the Fed to lose the ability to pretend that they couldn't, or basically to pretend that, hey, they came up with all these excuses of why they couldn't raise rates. Now all of a sudden things were going quote unquote better. So they lost that excuse, which then initially popped the bond bubble in about October of 2018. And then what happened after that is around December, you had the plunge protection team and Mnuchin and all the cavalry. Then basically what they did is they decided they would then basically renege on every single thing that they said they were going to do. So the Fed was stopped. They were printing at one point, they were selling $50 billion in bonds a month. That only lasted about 2 months before the market realized that couldn't go on anymore. And then when the Fed acquiesced, all of a sudden everybody came back into the market. They drove stocks up. The companies weren't even earning that much more money last year than they were of the year before when everything was going bad, except people felt more confident. What the Fed did this past week, which was another emergency maneuver, I believe it was Thursday, where they had an emergency 50 basis point rate cut. That is something that almost never happens, especially outside of a normal Federal Reserve meeting. I believe 2008 was the last time that one occurred. And what the big deal about that was that the market then sold off on that. And so that was a buy the rumor, sell the news. The Fed came through, they delivered what the market wanted. It wasn't enough, and then the market sold off. And so that to me is the biggest news right now, that the Fed gave them what they wanted. That wasn't enough, and the market's still selling off. Because traditionally, that would be a move where the Fed, acquiesces to what the market wants, and the market goes straight up in the air. So for me, that is really kind of the big moment here. But I think the important thing for viewers to understand is that there's a good chance that the market could actually soar higher, or there's a good chance it could also plummet. And the reason I say that is I'm going to pull this up on the screen right now. We have the Boston Fed's Rosengren says Fed may soon have to buy stocks. And so this is, a Banana Republic level, event that is going on here, where we're not only monetizing the debt by buying up our own debt, which is something that Bernanke said that we were not going to do, that now they're actually talking about the Fed going in there and buying stocks, which is just a crazy development. And that could send the stock market dramatically higher. And so, I don't want to, give like a huge pat in the back, but I am a certified financial planner, and I did have a strategy that basically covered whether the market soared or whether it plummeted. It wasn't going to do great if the market stayed sideways. And so for me, I'm sitting pretty. My clients are sitting pretty right now, but I don't want to make this a big commercial. It's just that today is a day that pretty epic in the stock market. But I know that there were some things that you wanted to talk about in regards to what's going on in the oil markets as well.
Yeah, I think we should maybe move that to the second video. I don't know how close we are to that 10-minute mark, but as you know, the markets, they're just make-believe pretend land of monopoly money that artificially inflate bullcrap. Since the 2008 financial crisis, the problem was never dealt with. It was paid over with more bad debt, with more crap, with more nonsense, with more just hysteria, where, again, a lot of people were like, hey, the correction needs to come. Hey, the correction needs to come. Hey, the correction needs to come. The correction never did come. And this is why people are thinking that this hit is going to be more severe than anything else. Tim, we're going to do official introductions of who you are. We're going to continue this conversation on our second channel. We have a second channel. We're trying to move away. We made some, we went huevos to the walls here on this channel, and it's time to really approach this whole situation of news in a way that's going to be smart and intelligent, and this is why we're pairing up with Tim. We're going to do official introductions and continue the conversation, especially around oil. Remember the whole conversation about peak oil a few years ago? Well, that was all bunk. We're going to continue that conversation with oil, with Saudi Arabia, with Vladimir Putin on the second channel. Click the link there. Tim, thank you so much for joining us, and thank you all amazing human beings for watching real and independent media. Stay tuned for more here on wearechange.org.